Have you ever hoped that you had a money printing machine? Well, that's not a possibility. There is perhaps one way you can get as close to that, and that's through investing in high quality dividend paying stocks that pay you dividends uninterrupted for years to come, and it's a wonderful way for you to continue to grow those dividends. In this video, we're going to be focusing on high quality dividend stocks that have a positive earning growth prospects and have been paying their dividend for many years. All right, our very first pick is a business no other than Verizon. It's a communications and integrated telecommunication services with ticker symbol VZ. It currently has a very high dividend yield of 7% plus, which is, as you noticed, based on their past 5-year average. It's really blowing it out of proportion, definitely, given the fact that their stock prices almost tanked. Could be a wonderful opportunity for investors who believe in Verizon and its prospects long term. From a dividend safety score, it's also worthwhile mentioning that they have a very safe dividend with a dividend safety score of 87. Verizon has a market cap of $155 billion, making it a mega cap size business. And also, it's considered to be a very low volatility stock with a beta score of only 0.28. For those of you who might not be familiar, beta is a measure of volatility, and a beta 1 suggests that the stock has similar levels of volatility to the overall stock market. In this case, given that their beta is way less than 1, suggests Verizon has a lot less volatility overall. I also want to point out for you their dividend history in terms of their payments. You notice here that Verizon has been paying its dividend uninterrupted for the past 38 years. That's quite a long history of paying their dividend uninterrupted. And in the past 15 years of those, they've increased their dividend year after year. They do also pay their dividend on a quarterly basis, and currently you receive an annual payout of $2.61 when you add up all the quarterly dividends that you receive from Verizon. Our next pick is a company no other than 3M. It's an industrials business, industrial conglomerate with a dividend yield of 5.54%. Again, that dividend yield is the highest amount that they've had almost in the past 5 years and has a safe dividend score of 75. 3M has a market capitalization of $59.5 billion, making it a large cap size business. And from a volatility perspective, it also has a low volatility stock. Looking at their history of the dividend payments, it's worthwhile mentioning that 3M has been paying its dividend and increasing it year after year for the past 63 years. Just remarkable history of their dividend payments, and they've really knocked it out of the park with that. Over 50 years, in fact, close to 65 years of dividend increase and dividend payments. It does also pay the dividend on a quarterly basis, and currently comes up to a total of annual payout of $5.96. Next, we have Leggett & Platt. It's a consumer discretionary business for home furnishings. The ticker symbol LEG has another high dividend with a dividend yield of 5.14% and a dividend safety score of 70. Leggett & Platt has a market capitalization of $4.54 billion, making it a mid-cap size business. Again, it has a volatility that is less than the overall stock market with a beta of 0.85 or an average level of volatility. If you look at their dividend growth and dividend history, you notice that they've paid their dividend for the past 55 years uninterrupted, and in the last 50 years of those, they've increased their dividend year after year. Next pick is Kimberly-Clark. It's a consumer staple business for household products with ticker symbol KMB. With a market cap of $37 billion, Kimberly-Clark is a large cap size business. Their current dividend yield of 4.23% is the highest they've had in the past 5 years. And on top of that, they have a very low volatility stock with a beta score of only 0.21. Kimberly-Clark has its dividend history of paying dividend uninterrupted for the past 87 years. Can you imagine? It's just a remarkable history of dividend payments, 87 years. And in the last 49 years of those years, they've increased their dividend year after year. Just a wonderful business to consider for dividend investors, given how, based on the past history, they've been remarkable in paying their dividend and increasing their dividends. Again, while past is not a guarantee of the future, past performance, we can look at those kind of details to see how reliable they've been at least in the past when it comes to their payment of their dividends. And the same goes for any stock or any investment for that matter. It's not just about dividend stocks. Of course, in life, never the past is a kind of a guarantee for the future, but it can provide you very valuable information to assess. Our next pick is Consolidated Edison with ticker symbol ED. It is a utilities business with very low volatility for its stock at a beta score of 0.28. It has a very safe dividend score of 90 and a dividend yield of 3.87%. It has a market cap of 28.9 billion, making it a large cap size business. Consolidated Edison has been paying its dividend for the past 47 years uninterrupted, and in all of those years, they've increased it year after year. Consolidated Edison does pay its dividend quarterly, and it comes up to a total of $3.16 for a whole year. Next, we have an information technology business, Cisco. It's a communications equipment business with ticker symbol CSCO, with a dividend safety score of 91, which is very safe dividend payer, and a dividend yield of 3.77%. Cisco has a market cap of $165 billion, making it a mega cap size business and a very kind of low volatility stock overall, with an average volatility score of beta of 0.84. Looking at the Cisco's dividend history in terms of their dividend payment and dividend growth, they have increased their dividend payment in the past 11 years. And in all of those years, of course, they have paid their dividends uninterrupted. They do currently pay their dividend quarterly, which comes up to a total of $1.52 in terms of their dividend amounts. Next, we are going to be looking at Medtronic, which is a healthcare business, and it's a healthcare equipment with a dividend safety score of 99, making it a very safe dividend stock and a dividend yield of 3.30%. A market cap of $110 billion makes Medtronic a mega cap size business, and it has a stock volatility score of 0.62 for its beta, which again suggests a low levels of volatility. Medtronic has been paying its dividend for the past 44 years uninterrupted, and in all of those years, they've increased it year after year. They do similarly pay their dividends on a quarterly basis, and it comes to a total of $2.72 for their dividend amounts. And lastly, American Tower is a real estate business that we are interested in. It's a specialized REIT with a dividend yield of 3% and a dividend safety score of 78. It has a market cap of $90.6 billion and a beta score of 0.70, which suggests low levels of volatility for the stock. They last increased their dividend last year by 15%, which was a very fast dividend growth. And it's worthwhile mentioning that they do pay their dividend on a quarterly basis with an annual payout of $5.88. They have a history of paying their dividend uninterrupted for the past 9 years, and in all of those years, they've increased their dividends. There you have it, folks. A quick look into a number of high quality dividend paying stocks that could almost act as a money printing machine for you and give you an option to continue to grow your dividends for years to come. What is noticeable about these picks that we shared with you are not only they have a very positive insights around their growing their earnings potential, they also have very reliable dividends that they've paid for years. On top of that, they were all handpicked for you with a dividend yield of over 3%. Those were some of the key considerations for us. And we also wanted to make sure we pick the stocks that are currently believed to be undervalued. All of those makes this video hopefully something of value for you and gave you some good insights and stocks to consider to add to your watch list, or potentially after additional research that you've done, maybe consider to add them to your portfolio. Of course, please do your own research before doing so. We just want to make sure we give you some good pointers and some of the key criteria that we take into account as we analyze stocks. At the end of the day, these videos are intended for entertainment purposes, and we want to make sure you do your own research before buying any stocks that we should talk about in this video or any other video on YouTube or on this channel overall. As always, if you enjoyed this video and gained something of value from it, we would really appreciate it if you give this video a thumbs up. It really means a lot to us and helps us grow this channel. You notice here on Momentum Finance and Stock Investing channel, we post every week several videos about investing, whether investing in the stock market, whether it's growth stocks, dividend stocks, penny stocks, investing in real estate or crypto. We also talk about ways to reach financial freedom. With that, thank you so much, and I hope to see you all next time.